Last week was not pretty for the stock market. Come on, man. Last week was not pretty for the stock market. I'm going to talk about that. I'm going to talk about this upcoming week. Let's jump in. What's up, everyone? I'm Brad. Welcome to the Money Dad channel. If you are not a subscriber yet, please consider hitting that subscribe button so you can continue to see videos like this. Let's talk about last week in the stock market. Down 5.64% for the S&P 500. It was a wall of red if you look at the entire week as a whole. All of the big names, Apple, Amazon, Microsoft, Facebook, Google, all of them all had down weeks as a whole, largely because of the huge sell-off on Friday after all the big tech names reported earnings Thursday evening. So Friday was pretty bad, and because of that, we had a pretty big down week as a whole. So let's take a look at the weekly. This giant red candlestick right here is last week. You can see how big that candlestick is in comparison to the weeks prior. Down 5.5% was a massive week. Not good for the stock market. And if you look down here at the RSI, we're kind of just in the middle, which means we're not oversold, we're not overbought from a weekly perspective. So, I mean, there could be more downside in the near future. There could be more upside. This RSI doesn't really tell us a whole lot on a weekly scale. Could go either way. But if you zoom in to the daily candlesticks, you can see the RSI is oversold. We might get some relief in the short term. That said, the weekly RSI is not overbought or oversold, so we could really go either way. So a lot of uncertainty in the stock market because of this coming week. We have the presidential election on November 3rd. That is Tuesday. So all of that uncertainty leading up to the election, I think, was the big reason for such a big down week last week, and that's gonna continue into this week, at least for Monday and Tuesday before we start to see election results. The market does not like uncertainty, right? Investors don't like uncertainty. When they're uncertain of something, they become fearful of what could happen. When they become fearful, they take their money out. They sell, right? So that's why we see these big down days when there's a lot of uncertainty. We don't know what's going to happen with the election. The polls are pointing towards Biden, which also would not be a good thing for the market, in my opinion anyway, because of the tax plan difference between Trump's tax plan, which is very friendly for the market, and Biden's proposed tax plan, which is not as friendly for the market. So with polls leading towards Biden, investors could be thinking, well, it looks like Biden's going to win. That's not good for the market because of his proposed tax plan. So we're starting to price that in early. So this could be pricing in the election already. So what happens when we get election results? If Trump wins, that's going to be good for the market. We know that he has a friendly tax plan for the market. If Biden wins, it might already be priced in, so we might not go down too much from there. We might actually go up a little because there's no more uncertainty at that point. We know the result, and we've already priced in his tax plan. If the results are contested, which Trump has suggested he may contest a loss, that is going to be terrible for the market because of the uncertainty around that. The market does not like uncertainty. It leads to fear. What did Yoda say about fear, right?
Fear is the path to the dark side.
Something like that, right?
Fear leads to anger. Anger leads to hate. Hate leads to suffering.
Did I really just do that? If you can't tell, I'm a pretty big Star Wars fan. So Yoda said it best. We are suffering. We at least were suffering last week. We might be suffering a little bit more this week too. We just really need to get to this election and get it behind us so that there's no more uncertainty there. Speaking of uncertainty, COVID. The news has been talking about COVID a lot, and it being one of the reasons for the market being down because COVID numbers are starting to ramp back up. I don't think COVID is as big. I'm not saying COVID is not a big deal. I absolutely think it's a big deal. I don't think it's as big a deal for the stock market this time around as it was in March, because COVID is not the issue for the stock market. Lockdowns are the issue. You have no economy if you are locked down. There is no growth. We saw GDP numbers tanked earlier this year after we locked down the country for a month or whatever it was. You have no economy if your country is locked down. Trump has said he is not going to lock down again, right? And Trump is the president until January, at least. Even if Biden wins, right? He doesn't swear in until January. So I don't expect there to be any lockdowns anytime soon. So I don't think coronavirus is really a factor here for the stock market. I don't think that's why we were down last week. I think we were down last week because we don't know what's going to happen with the election. There's a lot of uncertainty. There's a lot of pricing in a possible Biden win, and that's why we were down. And I think that's going to continue on Monday and Tuesday until we get results. It's the contested results. If that happens, that's going to be a big issue. I think we're going to tank if we have a truly contested election. So those are my thoughts. I don't think we're crashing. I don't think we will crash unless Trump loses and then contests the loss, which I don't think he will actually do. I think there's a very small chance that that happens, but it could still happen, right? If that does happen, I do think there's a potential for a market crash. That's all I got. Thank you for watching, everyone. Please remember to hit that subscribe, like button, leave a comment down below. I read every comment and I respond to most comments. Depends on if you're a bot or not. If you're watching this and you made it this far, I'm going to assume you're not a bot. So leave a comment and I will respond. Thanks, guys.